The call for the mid-August highs is playing out. We're looking at how far this can fall and how to profit from the downside. Gary Glover is taking us through the charts and what to expect. Good morning, Gary. How are you?
Yeah, no, I'm good, Chris.
Now, I think we've got to map out the last couple of 6 to 12 months to say credit where credit's due. So far this year, you've been right on the bear side for the major part of the fall, and then you turn from bearish to bullish right down near the low. And the last couple of weeks, the podcast that we've been going through, you've lightened your portfolio, you're taking profits off the table, you're increasing your stops into this mid-August high that you were looking for. So you've got a few charts in this week's report that we can go through. With that kind of context and background in mind, when you look at the NASDAQ, what does that say to you now?
Yeah, look, we've just got, look, the NASDAQ's been probably interesting there because it's actually probably had one of the better bounces. So, which is a little unusual from the 2002 period, because all along I felt like there was going to be a growth crunch, similar to that 2002 period. And that's that has played out. It has followed very closely to a couple of cycles there, one being the sort of midterm year cycle, two being sort of the 60-year and some sort of seasonal cycles. But it really just has mapped itself out quite nicely here in terms of the cycles that I look and follow, and just look at, for me, I look at, it's all mathematics, Chris. It's all the odds. I just look at stats. So which sort of setups work most often, and which ones are the, and then to me that I was just looking at sort of, sort of June, July statistically sort of pretty. Those are the 2 months. August, a bounce up to a certain amount of time into August is the next key zone there, and then really like midterm years, October lows in midterm years are just, they're as common as, I don't know, ice cream on a sunny day. It's just really, so we just got, we got the right sort of setup here so far, the right sort of price action. The only thing that's been a little different for me is that this rally has been probably a little stronger than I thought, and it's been sort of good breadth in that move, and it's probably rallied a little harder than I thought it might as well. Not unusual, because obviously with as you and I know, sort of these bear market rallies, they can be, even that 2002 or 2002 period. Some of those rallies in that period was actually pretty strong. So always got to be a little bit suspicious or worried when you get a really sharp kind of move like this, like all in one direction. But yeah, I think we just looks like we just got the timing here right now. So don't be surprised if this sort of takes a little while to actually turn down here. I don't think this just goes straight down and then goes to a new low here. That rally's been pretty strong, so there's every chance here that maybe we just get a higher low in October rather than a new low, and it could be a grind. It may just sort of be messy. Could be a real, a bit of a grind lower here. So it just might take its time here. So could just get could become a bit of a boring, messy, choppy market here for the next, next 2 or 3 weeks in particular. And then even after that, even if it does start to move a bit deeper there, could take a while. Could just sort of grind lower here. Might even follow that. Who knows? Might even follow that trend line, that channel lower. Might just sit on that channel and follow it all the way back. But yeah, look, we'll see how it maps out here, what we're looking for. To me, this is a bit of a critical week. This is our sort of key timing we looked at. We saw a little bit of a divergence here, a little bit of a reversal. If we see a bit of a sell-off here and we see volume, which we have, then that's confirmation that we're going to probably head a lot lower here. So I think we are going to head lower. I think we've sort of got confirmation here already this week, but don't be surprised if it's a bit of a messy, it might be down to up to, maybe down 3, back up 1 or 2, flash up again. And, so you might just get a sequence of sort of lower highs building here over the next 2 or 3 weeks before we really see any decline. I just think it could be quite messy here. So, but, in my report, I sort of put, critical week ahead, but I think it's Tuesday here and we've already shot, I think the market showed its hand here, Chris. So I think we are heading lower here, but just don't, expect a few sort of sharp bounces and expect it to be choppy along the way here. I think it'll take a little while to get going on the downside here.
Okay, well, they're good points. Expect it to be choppy and might take a bit longer to get going on the downside. That's what you've looked at on the NASDAQ. The S&P 500, you had similar kind of comments last week. It was a little bit different with how it was with acting within that channel and that downward resistance that you'd noted. That downtrend line could be resistance. Have we kind of touched that downtrend line and that's sort of marked out as a bit of a revert? Marked out a reversal.
Sounds been a bit more clear. So that has hit the top of the channel there, which has been a good signal there. I think that it also might have been the 200-day moving average as well. From there, I saw a few people posting that as well. So which can be important. So yeah, we sort of hit that key level, reversed here. Some sort of the volumes up. So we see a bit more heavy selling here, which I think we're seeing here. Then it's funny. I looked for distribution days, and we probably had, I think the NASDAQ had about 3 of them last week before the peak. So usually sort of 4 or 5 sort of gives you, some definite confirmation there that your market will turn down. So you should start to see a few of them before we sort of turn here. So, we're probably a couple short on the S&P there, but definitely starting to see a few more distribution type days. So those are sort of down days on heavier volume. So it looks like we'll sort of retreat here, but again, just could take a little while here. Might remain might grind away here for a few weeks first. Might be a bit choppy off this sort of top here. So the bounce has been pretty impressive here, and be interesting to sort of see whether at the start of the year I thought we were going to see an October low, something a bit deeper, but I'm just not so sure here. That bounce has been a bit more impressive. It's bounced above a few sort of swing highs as well. And there's actually been a bit of breadth to that, so that can sort of just sort of puts that October low in question there. It's good, the 60-year cycle actually found a higher low, so that's the one that's been pretty close as well. So I'll be watching that closely there. Just not going to surprise me if we see a higher low here and we see this as a bit of a downward grind here, which will make it a bit make it difficult. So probably not losing any money for the next month or two will be probably more important than trying to make a fortune, just because it could be messy and difficult.
That's always a target for capital preservation.
Yeah.
Rule number 1 and number 2 of investing. But the Aussie market, when we look at that, the last couple of weeks you pointed out 2 levels, and on the chart we can see it's first the red, which is the swing low, and then you've also got the highs back in 2020, those sort of 2 points that you'd earmarked on the Australian market. We've kind of, on the chart, looks like we've come somewhere in between, almost midway between the two. Yeah. Is that feeling like a resistance point and we're rolling over from here too?
Yeah, it really hasn't sort of hit any sort of key levels there. I sort of went back and had a look at a few other levels to sort of see if there's anything important there wasn't here. So, but sometimes there isn't. Sometimes it doesn't have to sort of narrow a level there. I know we had 3 or 4 days resistance at that 7075 level before it did sort of punch through it, but didn't sort of stay too long there. What I did see on the daily there, I just definitely saw a few days of distribution there where it was trying to rally and then sort of selling off. So it was sort of started to see some those sort of candles there where you sort of you rally and then sell off there, sort of, so we had like 3 or 4 days up there near the high there, and just on the Friday, just for me it was bang on my perfect timing and just showing weakness there, and definitely was definitely lightening off a lot of trying to get lighten off a lot of stocks and lighten off some of the portfolios there, just to sort of catch up a bit here.
Well, that's good timing, because as we can see, we're recording on Monday, Tuesday, the market's been down, or it is down so far on Tuesday. You've extended this out to have a look at the Dow, and then we'll look at some other markets as well, which are quite interesting. Just on the Dow, you've mentioned here in your report the 60-year cycle. So when you're looking to where we are in August, towards the end of the year, the next couple of months, you've talked about October lows for a long time now. Before that, you were talking about June lows, and in between August highs, mid-August highs. So these timing cycles, how is it that you've been coming up and working with this, and how is it that you're looking forward to the next 4 to 6 months?
Yeah, look, I look at a lot of different cycles there, Chris, but every now and again, the 60-year cycle can really be dominant some years. It's not always dominant. Sometimes it can be, can really go off. I think through the last commodities boom there in 2007, it was just bang on. It was really, it was like month by month was, highs and lows, and even the commodities were bang on as well. But then they go away for a few years and lose track, and then they sort of come back on again. So I just sort of noticed recently, like a lot of the cycles, and to be honest, most of the cycles all matched up this year. The 60-year, the sort of seasonal, midterm year sort of presidential cycle. So they all had some pretty strong similarities. So when all those cycles all match up together, supportive, and it's that's interesting that they're all, singing from the same hymn sheet, and there's probably some validity to that. So, but so for me, it's just a bit of a roadmap, just to sort of something to watch for. You can't, you've got to be careful sort of following these things to a T here, but yeah, definitely give you some ideas and stuff, and just at the end of the day, we'll let price action dictate us. And yeah, we've had a nice sort of sharp rally, a bit of a bear market rally, as some might be saying here. I think this market's actually been a bit stronger than everyone's giving credit for. I certainly participated in this rally and done pretty well here out of it. So, but it's gone into my timing here, sort of time to ease off. Everyone's probably getting a bit bearish here. I think it probably, you watch here, I think this will probably do a bit of work here. Probably won't fall away straight away. I think it'll, try and trap a few more people in here, give us, bounce back or snap back a bit. So, yeah, but don't be surprised if this makes a higher low here. That's the 60-year actually cycle actually made a higher low, so it didn't go to a new low. So, but yeah, that basically does indicate to us now that there could be some weakness from August through to October. That's what the 60-year cycle is indicating. So, so far this cycle's been pretty, it's definitely added a lot of value following that cycle. So, we'll continue to add a bit of value here.
So we'll keep watching that for the cycles for the rest of the Dow Jones, the main indices, and what you're trading. You've taken a commodity into this week's report and looked at the West Texas Intermediate crude oil. In the last couple of weeks and months, you'd mentioned how the oil was important for looking at the history of inflation and intertwining with equity markets, and energy can sort of top out as equity markets are finding a bottom and how they fit together. Is that why you've pulled this out, or is there something else happening as well?
Yeah, I just think this is a really important chart here, because it is oil is sort of driving equity markets here at the moment. So we mentioned sort of something Larry Williams sort of put up there was that we didn't need to sort of see inflation cooling off or declining there. We just need to see a peak in inflation. That would be enough. We saw once inflation had peaked and started to sort of cool off, then that's usually when equity markets sort of rally, and that's exactly what's happened here. We've seen a lot of the inflationary measures sort of start to ease off here, and then the market get excited about inflation peak. But sometimes these inflationary pressures, they can persist, and historically there, I think when I looked at my numbers there, around 2/3 of the instances when you've sort of got rates over 5%, is that they hung around for 3 years over 5%. So I think only a third of the time did they kind of come back down. So mathematically, I mean the odds still sort of favour inflation hanging around here. I still think there's some risks here. But it's interesting that oil prices sort of come back in a bit of a three-wave manner, come back to sit on top of the previous high, and it just sort of bounced off there last week. So this is a bit of a key level here. This is, if energy prices start to rally here, that will definitely will put a dampener on the inflation peaking sort of thesis, and might get everyone concerned here. And I mean, just need to be, if anyone's out there looking at energy prices and in the UK at the moment, looking through Europe, I mean, gas prices and they're just going through the roof here. So they're about to come into their winter. So hard to see how that's going to cool off as well. So, and if we see, we're starting to see wages starting to move higher as well. So, if energy prices stay high, which they are in Europe, and if we see oil price move higher here, which potentially this chart's saying we could get a bounce from here, and then all of a sudden that thesis of inflation peaking will become under some pressure, and therefore the market could come under some pressure as well. So it's just interesting that chart is sort of this is definitely one of the main variables for inflation. And should the oil price should we see a bounce in the oil price, that will definitely put some pressure on equities.
That's definitely one to watch, especially the timing that you're talking about with the Aussie markets. You've picked up some international charts as well. So the first one here is the FTSE. Did you want to walk us through what you're seeing here? And I can't help but ask, 0, 1, 2, 3 at the top. Is that almost the opposite of the 0, 1, 2, 3 you've been looking at over the last couple of weeks as the bottom?
Yes, I mean there's the 0, 1, 2, 3 pattern there is so basically you have sort of rounding bottoms and you have rounding tops here. That's the sort of theory there. So these are sort of like, there can be a basing pattern there in terms of building a base, sort of rounding up. And then also there can be a topping pattern as well, where you're basically sort of, sort of topping over and sort of rounding at the top here. So a lot of people who are successful shorters, so it's obviously pretty risky to be shorting the market there. They will wait for a series of lower highs, that sort of, that weakness to sort of come in before they'll even get involved in the short side. So that takes a lot of patience there to sort of, to be sort of shorting stock is probably the most dangerous sort of element of the market there. But this sort of 0, 1, 2, 3 pattern, I just saw that through a lot of indices. I just kept seeing it pop up there. I thought, well, that's that as that is, we saw the power of that pattern here recently with a lot of Australian stocks. Some of the actually the smaller growth stocks were making those sort of 3 high lows, and then they would pop. But now we've sort of got 3 lower highs here that could drop as well. So if the market does turn down here, that's a pretty bearish setup. So a lot of indices making that, and so it's a bit of a concern here. So I think if you start to see some of these indices, if they put a bearish reversal in this week and strong volume there after a third lower high, that's not a pretty technical picture. That's quite a bearish picture. So just kept seeing this across a lot of indices. That's a concern. That's definitely a concern.
So you also saw that on the Nifty 50 that we put on screen.
On the Nifty 50. So this is obviously the main index in India, so a completely different market as well, showing the same sort of pattern as well. So if this reverses here, we start to sort of head down here. That's again, it's a pretty bearish sort of technical setup again. So it's not one you want to, it's the bullish here. This is not one you want to see. That's it's like a basing pattern in reverse here. So I mean the beauty of those sort of patterns there, Chris, if you are sort of trading them, not that I will be trading the short side in these ones here, but our stop's pretty tight, at the last swing high. So if we go above there, we went over wrong. So at some point you can be wrong there, but it's just this sort of the NYSE Composite there just gives you an idea. So there's our 0, 1, 2, 3 pattern. When you sort of see that, that's when you sort of move down and usually sell off aggressively and go to a new low, which it's done here. But then you can get 4 or 5 lower highs as well here. So we've gone back up again and fell short here. If we turn back down, which the last couple of days we have turned down, that's pretty bearish as well. Oftentimes that indicates going to a new low. So just a lot of indices looking a little negative for me. Just when I started looking through quite a few of the main indices, that they look pretty negative. So definitely some sort of caution here with global equities.
Well, we move to then look for a trading opportunity. You've mentioned oil could be working inversely with the equities markets. So the 2 big ones on the Aussie market, we can start with Santos. That chart looks like quite something. It's popped up. So it was a bad place to be, and then, well, it was kind of a good place to be, but it wasn't performing like the rest of the energy stocks. And now it's presumably reported and jumped out. So what's catching the eye on Santos now?
Yeah, so kind of like Elliott wave sort of terms there. It's like it's a little bit of an expanded flat there. So after the low, sort of it rallied up and then sort of pulled back, went to a slight new high, then a slight new low there, and then we rebuilt again. It's had a bit of a bounce and then pulled back and made a higher low. And then we've sort of seen the two, the eye-catching thing there is the big volume there the last few days. So we saw that big volume there a few days ago on the up. And then we're seeing the big gap up here on big volume as well, which and breaking out of the range there is pretty positive there. So that just of looking through most of the stocks here, I didn't see anything. I didn't see too much that looked positive to me. The ones that look pretty positive here were some of the energy plays. Obviously, we've seen coal's obviously off the charts there and really strong. So a bit hard to trade those because they're sort of they're already pretty vertical. But definitely the all stocks have had a bit of a pullback. Now made a higher low and starting to sort of kick up here. So they're looking pretty encouraging.
And Woodside looks a bit different to Santos.
Does look a bit different, yeah. I mean, look, the pullback so far been pretty mild, so it's really showed some relative strength here, Chris, as we sort of know, over the period here. So the thing about relative strength, if you can't sort of sell off much when you have a bit of a decline there, it leaves the stock in a strong position here, which is the case here. And I just can't help but think like a lot of a lot of big tops, a lot of major highs come in with this overlapping, this little three thrust sort of high there. There's sort of what they call these broadening sort of tops there. So you usually run really strong into the high, and then they start to overlap. And that overlapping nature is sort of showing you get a pullback there, and then you expand to a new high, and you just go slightly higher each time, and you pull back deep into the range again. So then you expand again. So that trend is that's not a strong trend because it's not sitting on top of each of the past move. It's not sitting on top and building like a staircase. It's actually overlapping in nature there. So, but you often see this little three peak. I don't know. I think it's another trader referred to it as three peaks or doomed. What's he call it? Doomed top or something like that. But yeah, just definitely see. And this stock's got some history. I think 2014, 2018, it's made this sort of three thrust sort of overlapping peaks as well, a few times there. So it's definitely sort of something that you do sort of see. So just that looks pretty positive for me, but this might be the top. I mean, we hope really this is the last leg up in oil, because then if oil comes off after that, then inflation hopefully would have peaked. And that'll be good for equities then. But this might just cause if all does bounce here, and then that'll put pressure on equities, drive equities back into an October low, and then finally this might be the last leg up in oil, and then that's the time to sort of sell oil stocks. And I mean, hopefully, when I suggest a few clients here, if I see these oil stocks go to new highs here, I'd be selling those, and then if the market's going to go back to retest the low, I'd be going putting those back into equities, industrials, or maybe even looking at some growth. So if the market does come off then, so timing could be So just think, I think this looks pretty interesting here. The volume was up last week. It's pulled back on some lighter volume in there, and I think this could run up here and make a third peak here. But to me, this might be the last leg up for all stocks here. So just got to keep an eye on that. I know those sort of it's quite inflationary periods. Energy does pretty well here, which it has done so far. But we're all hoping that inflation does sort of does peak here, and that's potentially what can drive the next sort of bull phase. That's what we're really hoping for. And so, but just got to watch. Just got to watch this sort of push inflation here, and it definitely can impact the quality. If inflation hangs around, Chris, then we might get a bounce in equities, but we won't get a really true bull market. So we don't. ideally we want to see inflation peak and cool off here. Then equities can really get going.
Right, well, that's what we'll be looking for. You've tied it all in. You've tied in energy, you've tied in history, you've tied in cycles, presidential cycles, 60-year, mid-years, and inflation. So there's a lot of history to look into that.
It's almost like a cook, putting all the ingredients in, into the big pot.
That's it. And then we come out with some trades at the end.
Hopefully we get the right thing at the end here. But no, it's an interesting period. The markets, it's been a while since we've had inflation this sort of high here. Some big inflationary numbers there. My concern is that the longer they stay there, the harder it will be to come back down. So, so we might get a bounce in October then, but we want that to be a ripping, like some of the rallies out of midterm year lows, particularly October lows there, can be massive. But if we've got inflation overhanging us here, that's gonna limit that ability to really open the shoulders and have a big move. It might just be a 70s or a 40s style move where we get a decent rally, but it hits a wall and stops and then comes straight back down again. So we don't want that. We really want to sort of see inflation start to sort of ease off here, and then equities can sort of hopefully get back into the bull market here, towards the end of this year.
Good sustained growth is what we're after if we can get it.
Yeah.
Well, they're very good insights. So thank you, Gary Glover from Novus Capital.
Thanks, Chris.
If you want to watch Gary's Friday videos where he breaks down the leading charts of the market, you can click on the right-hand side. And if you want to have a look at springs, which should be like a reversal and a false break, you can click on that pattern on the right-hand side as well.